Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be going over the project results for February 2025. We're going to be talking about the individual month performance. We're going to talk about the premium, the debt, taxes, what I ended up with at the end of the day. We're going to look month over month at each individual funds, and then we're going to look at how the project has performed over the year and over this last entirety since its existence in June of 2025. Without hesitation, let's begin. All right, guys, looking at the blue over here, the amount of premium I received for February 2025 was $4,676.46. If I did not have my MSTR loss, which I took this last week, which was about $3,500, this number would be closer to about $8,100. But throughout that time period, I still had to pay debt, either my HELOC loan and my Robinhood margin. So the amount of debt I had to pay is in the orange here, and that's $1,673.28. Maybe I'll zoom in more. And then based off of this premium, I'm going to have to pay about $1,636.76 in taxes. This is a very blanket tax. I'm a high income earner, so I just did taxes at 35%. So I set this money aside when it's time for tax season, and there's no surprises. Yes, some of these funds are return of capital. Yes, some of it's 100%, some of it's 50%. But end of the day, just to be safe, I like to overball the number. And so when tax time comes, I have the money set aside and there are no issues. And then if we look at the net of how much money I made is in the yellow here. If you take the premium, subtract the debt, and the taxes, I was a net $1,366.42. Looking at this number, it doesn't seem that good at all. But the way I look at this number is if I did not take out any debt, right? If I did not take the HELOC loan and I did not borrow margin against these funds, I would be making $0 extra. So if you'd ask me for someone on the street to give me $1,366.42 for free, I will take you up on that offer 100% of the time. Yes, this number looks small, but if we look at January's numbers, that number was closer to $5,000, right? The premium was a lot higher. In January, we had 5 different payments. Yeah, for the weekly payers, we had 5 different payments, and some of the distributions for Kurv and yieldmax was relatively high. So therefore, and I made some money on some options trades. So the number was a little bit higher, and then the net is a little bit higher. But this last month, I took that $3,500 loss in MSTR. Therefore, this premium is a little bit lower, which then makes my net a little bit lower. Now that we talked about the month performance for January and for February, I'm going to talk about the individual performance of my holdings. The first one we're going to talk about is nvdy. So in January, the first payment of the year was $2,591.55. And this last month, nvdy paid me about $2,417.70. So this payment in January, there's actually 2 nvdy payments. That's why this number is so high. The distribution was about 0.82 and 0.89, which almost equates what the distribution was for all of February, that 1.6. So the premium was a lot higher, and I definitely like that. Moving on to Goop. So Goop, the first payment of the year was about $315.45. This last month in February, the payment was about $35 less. I don't like to see that, but eventually it's only the first 2 payments of the year, and I think it'll go higher as I acquire more shares under my cost basis. Right, moving over to amzp. The January premium was really high. It was at that $858.90. The February premium, which is in orange, is $797.55. I think for most of February, the premiums have all been lower. I think it's definitely a little bit of the turmoil in the market, talk of tariffs. People were afraid, so they started pulling their money out. But the one bright side, jepq had a higher distribution. In January, I didn't have all of my $21,000 invested at the time, so I missed that ex-dividend or the record date cutoff. Therefore, I didn't get the January premium, but I did get the February premium. The February premium was $172.88. For a $20,000 investment, this number, I think, is relatively smaller compared to what yieldmax does, what Kurv does, what xdte does in the Roundhill community. But the thing I like about jepq, kind of like with gpix, we'll talk about here in a moment, is the share price does not fluctuate as much. Usually for an option strategy ETF like a yieldmax, every time the market goes down 1%, the share price for a yieldmax fund will go down 3 or 4 times that number. Therefore, I like having a mixed batch of high income ETFs. jepq and gpix are my tier 3. They usually appreciate when the markets are going good. They don't necessarily lose as much money when the markets are down, and they pay a consistent distribution of about 35 to 40 cents. So they are my core foundational holding in my portfolio. Okay, moving on to xdte. The xdte premium for January, excuse me, for January was $1,596.34. It was lower than what it was in February. February was only $1,001.22. The reason why xdte premium is higher in January, there was 5 weeks in that month, or 5 payments in that month. So therefore there was a little bit of extra premium made because of that. And I'm pretty sure coming up in March, there's going to be 5 payments as well. But you might have to check me on that. All right, moving on to rdte. The premium in January was $2,236.34. The premium in February, which is in orange, is $1,352.46. The premium in February is almost half than what it was in January. I don't necessarily like seeing this number, but I'm going to attribute the January premium to the turmoil in the markets. Also, today is March 4th, and there's still turmoil in the markets where we can't decide if we want to go up or if we're going to start continuing on a bearish trend. Moving over to ymax. As is the same story with most of these funds, the January premium was higher than the February. The January premium was $819.26. The February premium in orange is $746.95. So basically month over month, all of these funds are not increasing their premium, even though I am reinvesting back into these funds under my cost basis. So theoretically, I should be making more money because I have more shares by the end of the weeks and by end of the months. The only fund that actually follows the trend the correct way is ymag. So in ymag, the January premium was about $514.11, and the February premium was a little bit higher, it was about $70 higher. It was $584.36. This is what I want to see. I want to see the premiums go up over time, not go down over time. And we have 2 more funds to go over. So for gpix, kind of like I talked about for jepq, in February or in January, I didn't have my full $22,000 invested in gpix, or I didn't necessarily hit the declaration time to get the dividend distribution from gpix. So therefore, I only had like $2,000 invested. So my premium was about $14.50. But the orange here in February, I was able to use that $22,000, and for a $22,000 investment into gpix, it was about $157.94. Same story as jepq. The premium isn't as high as a kurv or an xdte or a yieldmax fund. However, I do like that the fund doesn't fluctuate as much during market upturns or market downturns. And moving over to the final slot is the trades I just made. In January, I made an extra $1,439 in trading. That's either SPY or nvdy and things of that nature. And in February, I only have a loss of about $2,835. And I'll explain the trades I made. So I made an nvdy trade where I made $555, which was a net positive. So that kind of took away from some of my MSTR loss of $3,500. Then I did a S&P or a SPY call, which I made $100, and then I did a Tesla put for about $70. So by the end of the month, I didn't necessarily have too big of a loss, but I was still down about $2,835. In the long term over the year, I definitely think I will get this money back with no problem. Just going to look for the right time in the market and then jump on that opportunity. But yeah, it never feels good getting a loss. All right, guys, I'm going to throw myself back onto the screen here. And this specific portion of the Excel spreadsheet, we're going to look at 2025 as a total, right? If we look at the individual holdings, it doesn't really tell the story. If we look at the month over month, it doesn't necessarily tell the whole story. So let's take a look at all of the money acquired or debt I had to pay throughout 2025. With that being said, the total amount of premium I have made in 2025 thus far in 2 months of trading is $15,078.66. Moving over to the total amount of debt paid. To make $15,000 in premium, guys, I only had to pay $3,164.01 in debt. And then if we move over to a very generic blanket highballing taxes at my 35% tax rate, I had to pay about $5,277.53 in taxes. And then if we look at what is left over at the end of the day, we have the net here, and that's $6,637.12. I will take that amount of money any day of the week, any time of the year. All right, guys. So the view you are looking at right now is new to the month over month videos I'm making. I wanted to add a chart in Excel that accurately captures all of the results this project has done in its entirety, right? It's great to track funds month over month, week over week, fund over fund, and then year over year. But I think it's also important just to throw all of that information into one spot to be like, hey, you can just look at this and know it's either working or it's not. So let's make that determination. 9 months. I have about 3 more months until I hit the 1-year anniversary for this project, which is going to be June of 2025. So let's get started. The total premium I have received since starting this project 9 months ago was $77,466.57. During that period, I had to pay about $10,130.54 in debt, which wasn't that big of a price to pay for making about $77,000, if you ask me. But where I get wrecked the most is taxes, because if I don't pick high income ETFs that are tax advantage, I'm going to get wrecked when it comes tax time. So for my project thus far, I have paid, or coming up, I'm going to pay about $26,656.27 in taxes. And moving on to the project net. So after you take away the debt payments of my HELOC loan and margin costs, you take away the taxes, I'm still net $39,675.81. With that being said, guys, that wraps up the video. Just wanted to talk about the February 2025 results. Nothing more to say here. Let me know what you guys think. Good luck out there. Have fun. See you in the next video. Matt out.